Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So, I hope you guys all had a fantastic weekend. Enjoyed all of the uh, wild NCAA tournament games. This is definitely one of like the best sporting events of the year, in my opinion. So, I always really enjoy these March Madness weekends. Um, and what's kind of funny is that we're kind of at almost like a March Madness period for biotechs. And what I mean by that is that as the quarters kind of progressed, okay, a lot of companies uh, have reiterated, or they did reiterate, that they were planning on releasing data by the end of the first quarter. So as obviously the calendar winds down for the first quarter, then it just becomes kind of like an increasingly tight window of potential release dates when they can present that data, right? So um, as we as we got into last week, you knew that there was basically only 10 sessions left, right? So it was a handful of names were on watch for biotech data, and then obviously as coming into this week, there's only 5 sessions left, so it was even more so, right? Um, and we went over kind of like what I look for in biotech events in one of our option sessions last month, and if you're kind of interested in what I look for, then definitely go back and check that out. Um, but long story short, what these events come down to a lot of times is risk reward, right? So it's risk reward. Like what's the potential, and what's the potential on the upside? What's the potential on the downside, right? What are the options pricing in, and what could the stock possibly move, right? So there's it seems like every day that there's some sort of biotech moving off of some sort of headline, but whether it's expected, unexpected, what the options were priced in, right? Where the positioning was going. I mean, like that really determines whether like the trade works out, or whether it's a setup that is worth putting risk on. So a few of the ones that I were watching, I just wanted to highlight real quickly. It was one of them was DERM. So this was one that I like personally. Like I like trades where there's a little bit more of like a asymmetric risk reward profile, um, where either that there's a lot more upside potential versus downside, or a lot more downside potential versus upside, right? Because like those can often be like the scenarios where you see like these really really wild reactions. So for Durham, like the stock was like $6 or $7 stock, right? But it was basically trading at cash levels. So that means that like the market cap of the company was basically what they had in cash. So when they presented phase two, it was like their basically their key pipeline asset. So um, the way the trade was set up, it was priced in about 4 to 5 points, but you knew that if positive, that there was going to be more upside versus downside. Well, first of all, the reason why is because A, it was trading at cash, and B, it was only a $6 or $7 stock. So it's not going to go down more than $7 if it's a $7 stock, right? Versus like the upside, there were estimates that it could trade up into the high teens to 20s. So from like a where it was at 6 or 7, it was a more of like an asymmetric risk reward profile, right? Same thing goes with so that was Derm, that was last Monday, and now this Monday was PTI. So this is kind of like a same scenario, right? Like I'm screening for what I like to think are these asymmetric risk reward profiles. So this was another name that was scheduled to have data. They released data this morning. Obviously, you can see that Derm was good, PTI wasn't so good, and this was actually 4 trials that were expected to read out. So it was four specific data sets that they were going to be presenting. And this morning, you can see that it was met by the market with selling, so it was pretty underwhelming. But the way the options were set up, right? So this was pricing in about a three-ish dollar move, right? So the way the options went out, it was say between 2.5 to 3, right? But again, this is like another name that like a smaller market cap name that the risk reward profile is stands more in favor of the bullish bet, right? So downside, it could trade obviously, down to where it is right now. About $2 is the current cash level, so it's actually trading underneath that a little bit. Versus the upside, if positive, I mean this traded well past 10 when they released data back in the fall. There were some estimates that this could be in the mid-teens, 20 area. So from a $4 stock, that's significant. There was option activity, April option activity. So let's pull this up. The April option activity at the April 10 strike calls that were very busy option activity with people looking for a potential massive move up. So you can see like the open interest going in, right? Greater than 15,000 contracts sitting in open interest at the April 10 strike calls. So you can see, it wasn't just me that felt this way. Like the option activity was kind of indicating like the same type of positioning, right? So it was, people were buying upside calls because they felt that the upside potential was much more than like the downside potential. Unfortunately, it didn't work out, right? Like it, underwhelmed and the thing gaps down. But again, it comes down to risk reward, right? Like what's the risk? What's the potential risk, and then what's the potential reward? And then you go and you design option trade based off of that, right? And again, I mean, kind of like summarizing all of this into something option related. I mean, it just highlights why options are great for these types of events. It's like when you have these 50, 60, 70, 100% plus type moves, right? Like it's if you're holding the actual equity, it can be a lot to stomach, right? And it might not fit the risk profile for a lot of people. Like they can't tolerate those types of swings. And that's why options can be really great ways to target these events, is because you always know what your risk is, right? If you're debit only option trades, right? Like as long as you're not selling naked options, if these are debit only, then you know what your risk is. It's the price paid for the contracts, right? So it's like your risk is defined, and your reward is, your reward is going to be based off of what the potential is, right? So like what the potential, how good the data is, or how bad the data is, depending if you're bearish or not. Okay, so Derm PTI, so Derm last Monday, PTI this Monday, and now kind of like the other big one I'm watching is Gilead and Galapagos. So this hasn't read out yet, but it is expected by the end of the first quarter. So basically, it's on watch at any point now. So Gilead and so Galapagos should be the more volatile of the two. They're a smaller market cap name, and this is much more important to them. Based off the overall market cap, their pipeline, they don't have a drug on the market, so this will be very critical. Whereas Gilead obviously is a well-established big cap biotech. They already have sales, but it is at this point, after a failure back in January for their actually in February for their NASH candidate, this is now like their most important pipeline asset, right? So it is going to be it is going to move the stock, but it's not going to be the same percentage move as, say, Galapagos. But these are the ones I'm watching. Gilead, I sent along an update today, just basically saying that I wanted to highlight that data is officially on watch and change the trade a little bit from just like a straight bullish bet to more of like a strangle. Just acknowledging that with a little bit weaker price action, there could be downside. If it disappoints, this is its primary pipeline candidate at this point also. So, it does seem to be the potential for maybe like an overshoot to the downside, or if positive, it could maybe overshoot to the upside. But analysts, from what I've read, expecting somewhere in the range of 5%, whereas Galapagos could be anywhere from like 10 to 20 to even maybe 30 to 40%, depending on the data. So keep an eye on those two, right? But, a lot of people get scared away from biotechs just because they see they see like these 50, 60, 70, 80, 100% plus types moves, and they say how can anybody trade that? Well, that's why options are so great, is because the risk is defined, right? So that's why options in play, and a lot of what I do focuses on these bio events, because I obviously trade options a lot, and they're specifically suited for these types of setups where, it could have a really, really big move. So, defining your risk is, allows you to get involved and not be as uncomfortable as, say, something that, you have the stock of, and you theoretically could move like 50 or 60% on you, right? So keep an eye out for Gilead, Galapagos, and once the calendar flips over to April, then we get like a whole new round of names to watch. That's just really how it goes, right? It's just like a constant flow of news. I mean, as the calendar changes, then the names that we're watching change, and then like the data that's expected keeps kind of progressing and rolling along, right, as the year rolls along. So there's always something to watch. Sometimes there's bigger cap names, sometimes there's smaller cap names, but there always is plenty on the calendar. So as we get into as those come onto the radar, I'll be sure to pass them along. All right. So let me know what you guys think about the Derm trade, the PTI trade, Gilead or Galapagos. Both are coming up, or just any trades that maybe in right now or maybe coming up as well. So I'd love to hear from you. All right. So I hope you guys have a great night, and I'll talk to you all tomorrow.